I hope you can hear me. Can you hear me? Rach, how are you?
Hello, I am good. How are you?
I'm well. How is H-Town?
Yeah, it's boring. It's boring.
Okay.
Boring.
So, are you back? Are you back, or you're still resting?
I came back and then I got burnt.
Got paid with what?
Just now, like it kept on making these cells and it's just going up. I'm like, what?
So, like yesterday, we discussed. Like yesterday, if you check the daily candle of yesterday, we actually spoke that it has to come and touch this key level here, of which it did. Came and touched, then crashed a little bit. Then right now, it's back now. It's still there. We now need to know, is it going to respect it, or is now going maybe to test that highest high that it created? Because this is the highest high that Crestland has created so far. So now we just need to see if price does not give us any rejections here on smaller time frames. We are simply going to wait for it to come all the way to this highest high. Then from that highest high, we simply wait for the reaction that price will give us. You understand?
Yes.
So yeah, it's really a very, very, very sensitive moment right now on Crash 300, because if ever someone is not patient enough to wait for price to really act according to what it wants to do, you might just waste your money on unconfirmed moves. Like the moves will not yet be fully confirmed that we are now most probably going to that particular downside. So right now, this is the highest high. So right now, if ever it rejects there, this area will now be our lower high there. That will now be a very good confirmation for us to, because this is the highest high. If ever it rejects here, this will be our lower high according to market structure. So this will be our lower high according to market structure. Lower high there, then it goes all the way, breaks this low and makes a lower low. So that would be the new market structure. But right now we simply have to wait now and see, because if you check now, market structure on the higher time frames, it hasn't really shifted. It hasn't really shifted to come to the selling side, because if you check here, okay, if you check from here, higher low there, higher low there, higher low here, higher low here, higher low here as well. So basically higher low, higher low, higher low, higher low, higher low. So basically market structure, according to the highest time frame, it's still bullish. So here, according to what we're seeing here from this higher low, price can even break here this key level. Once it breaks this key level, it can even retest it, maybe then come and test now this highest high. So if price now comes and fails to break this highest high, that is where we can now say maybe market structure has now shifted. That most probably would be something like a double top, which will be a reversal pattern to say now we are reversing to start selling, since we've been buying and buying. This is a bullish market structure, higher lows, higher lows, higher highs, higher low, higher low, higher low. So this is a bullish market structure. So basically, once we get that one, it will actually be a very good confirmation now to say most probably we are now going down. We are now going down now. So there, where it is right now, if ever it really breaks that key level, definitely it's now going to the highest high that it created to test that highest high. Once it tests that highest high, fails to break it. Once it fails to break it, we know that most probably now we now have a reversal pattern. Once we have a reversal pattern, it means most probably now that's where the sales can now hold longer. Because if you check all the sales that have been happening, they were not really holding for a long time, like a very, very long time. So basically, that is what we are currently seeing on our crash 300. So it's simply a waiting moment right now. It's simply a moment to actually wait. Even the trades that you'll be entering on that crash 300, for now, they don't even need to be aggressive entries. You just need to be conservative and make sure that your stop losses are very tight, because we don't have a bearish market structure confirmation on a higher time frame as yet. That is why most of the sales that we have been getting, they were not even lasting long. So that is what I'm currently seeing. This key level, once broken, price will push all the way. So you just need to mark out even this highest high, mark out that highest high on your chart, so that when price comes to that highest high and test that highest high, if it fails to break that one, most probably it can actually start to reverse from there and start maybe to go to the downside. So the first target, once it begins to reverse, it's always going to be this trend line here, because we never know, is the market going to still maintain this trend line for how long? We don't know. So basically, once price comes there, even the sales that one will take, they are still going to, the first major tip is this trend line. Touch there is this trend line there. So once this trend line now is broken, that's where now we now look for other targets here below that trend line. But for the meanwhile, that will be our first major target. So this is the simple structure that you currently right now need. You don't need a lot of complications on your chart right now. This is the simple structure that you currently need on your crash 300. Once that key level is broken, know that for now you're going to relax and wait and see how price is going to respond there on the highest high. If it doesn't come to the highest high, most probably it can come even. If you know the concept of order blocks, yes, we haven't covered it, but if it can come somewhere here as well, that's also another level. That maybe if it doesn't come to the highest high, it can even, or even can come there, then give us a rejection and close below there. It's also possible. So basically, you just need to mark out that area there. You place a rectangle there and your highest high there, like that. So that is also another thing that we are currently looking at for the crash 300. So right now, don't be in a hurry to force sales, because we do not have a higher time frame. We do not have a higher time frame shift in market structure to the downside. So you just need to relax, make sure that you protect and conserve your equity. So here, if it comes, I would be very happy if it comes and bounces here, because that will actually be a lower high, lower than this one, which will actually be a very interesting market structure. It will be a very interesting shift in market structure, because so long that one is a lower high, we know that most probably the market can now push all the way and go and form a lower low. So basically, that is what I'm also currently looking at for this crash 300. So right now, it's simply a waiting moment. You just need to relax, protect and conserve your equity, and focus on the instruments that have full confirmations as of now. So that is, I don't need to even go to the smaller time frame right now, because I'm simply at a key level right now. I know that once that key level is broken, price is going to push all the way to that highest high, or that marked yellow zone there. So once price goes there, that's where maybe it can. So that key level here is it's the deciding moment now. This is actually the deciding area here. We just need to see how price is going to react. So even it can even respond and even start crashing from that key level. It's also possible. We are actually ready for all of those scenarios. So whichever scenario is going to happen, we are basically ready for it. So even if it starts crashing from that key level, we are also ready for it, because right now it's still below that key level. So long we are still below that key level, the probability of it crashing, it is still there. It's still there, because this can actually also be a double top, whereby we have this top there. That can also be a double top. It can also be a double top formation. It can also be a reversal pattern, whereby it can even crash all the way to here. That can even happen. You just need to get those rejection on a smaller time frame. Then we simply strike. So this one, you can also include your Fibonacci. You can also add your Fibonacci's to see where price currently is according to the Fibonacci. So according to the Fibonacci, there is my point A there. My point B is this area here. So according to the Fibonacci now, price broke the 61.8. Currently, it's above the 61.8. So right now, it's still waiting. So when you see price breaking the 61.8, sometimes it's a sign that most probably. So right now it's crashing on that key level, which is good, but we just need to, once we get that confirmation on a lower time frame, it's good. It's good for us, because we know that definitely we might actually push all the way to the downside. So now I'll actually be happy once this price crashes below this 61.8. That will actually be a good thing. Crashes below this level, then we can go, most probably we can go all the way to that trend line here. So this trend line is actually our first target for these sales. If ever they start there, that trend line there would actually be our first target. So right now, we simply need to go to a lower time frame, like the 30-minute or the 15-minute. We get a confirmation, a bearish candlestick confirmations, we simply strike and sell. We simply strike and sell. So I hope it's clear and there's no confusion there.
All clear.
Okay. Right. So here we are on the 15 minute. Here we are on the 15 minute. If you check on the 15 minute, price was pushing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high there. Then from there it broke this low, made a lower high, lower low, lower high. Most probably lower low, lower high, lower low, lower high, lower low. So from this lower low now, when they break this lower high now. So the break of that lower high to make that higher high, higher low. So now we are back to this high now. According to 15 minutes, we're back to this high. So if it fails to break this high, that can also give some opportunities whereby it can even shift the market structure here according to the lower time frame, then come and break this higher low. Once that higher low is broken, definitely we now have a lower low there, lower high, pushes like that. So we just need now to wait. Let's get a bearish candlestick confirmation on this 15 minutes, then we are going to enter. A bearish candlestick confirmations we are referring to something like a bearish engulfing. A bearish engulfing was simply referring to something like this. We're simply referring to something like this here. That is a bearish engulfing candlestick pattern. It simply shows that the sellers now are most probably in control more than the buyers. So that pattern now, once we get it somewhere here, it's actually going to be a confirmation that most probably now the sellers are now in charge. So even yesterday, when we got that one, it was simply also an entry trigger. That bearish candlestick pattern, which was also an entry trigger yesterday. Even if you entered just after that and your stop loss just above there, you're simply going also to be safe all this money you're supposed to make it. So now we simply fold our hands, because here, if you check the previous 15-minute candle, it's not a bearish candlestick. It's not a bearish candle. It's a bullish candle actually. So now this can actually be a sign to say the buyers are still in control. This can even break that and go to that highest level that we spoke about. Then we will look for entries at that highest area. So either you're going to look for entries there, or here once we get the bearish candlestick pattern, or let's look for the other scenario that can most probably happen besides the common scenario that, okay, it's crashing, which is good. Is it crashing? Is it crashing? Is it crashing? Let me see. Is it crashing? Because if it's crashing, it's actually good for us. Okay, so it's looking nice. So basically, we now need to see how this candle is going to close. How this 15-minute candle is going to close can also determine even the entries that we're going to take. So if it actually closes nicely there, can also give us some opportunities to sell. Can also give us some opportunities to sell. So we just now need to wait now. Those 8 minutes left for that candle to close is simply waiting time. We don't need to rush into the trade. So here, even if it closes nicely, it can even give you, even if you want to put a tight stop loss there, you can even put it like there. But for someone who wants maybe to give it room, you can even place it somewhere here above the key level. But even here, you'll also be okay depending on how that 15-minute candle is going to close. So we are still waiting now. We still fold our hands and wait and see how that candle is going to close. How is that 15-minute candle going to close? So if it closes well, we are simply going to jump into that trade, and we hold all the way to that bottom trend line that I showed you. And then we see how far it will take us. So now it's simply waiting time now. Simply waiting time. You're folding your hands, waiting to see how the market is going to move and respond to that area. So I hope the crash 300, I hope it's clear. I hope it's clear to everyone. I hope it's clear. If you don't know what crash 300 is, you simply need to see me in my inbox, because you still have a lot to know. If you don't know what crash 300 is, so that is basically what we are looking at. Once it begins to give us that those crashes there, simply an opportunity for us to sell. We hold all the way to that trend line. Once we break that trend line, there, that's where now we can look to hold for longer for longer times. So we simply now need to wait for the 15-minute candle to close. We now wait for the 15-minute candle to close, then we'll make a decision from there. So crash 300, that is it for now. That is it for now. Nothing much to talk about there. That is it for now, nothing much. Once we break that key level, we're looking at that area here and that highest high for our possible entries. Then those entries, we'll be looking to hold them all the way to this trend line, which will be our first target, because it can come and respect this trend line and continue going up. So that trend line will be our first target. Once it breaks that trend line, now that's where we now look for major areas at the bottom. So now we are simply waiting to see how price is going to respond there for our crash 300. So another scenario that can happen is whereby price does something like this. That's a fake out, whereby it fakes out of that key level, fakes out, then comes back. That can also happen whereby it fakes out, then after faking out, it comes back inside the key level. That can also happen. You also need to be ready for that, because here we also have the 78.6. It can come here and touch the 78.6. Then with respect to that, can even come back inside this level. So you also need to be cautious of that. Once price comes back outside and respect 78.6, then comes back inside the key level. Once it's back inside the key level, simply opportunity for you to enter. Once it's back inside the key level, you simply wait for the retest inside the key level. Once you get that retest, you simply enter. Then you hold all the way to that trend line. So you also need to be aware of that scenario. It can also happen whereby price fakes out, maybe go and respect 78.6, then closes below the key level. So that is also a possibility. That is also a possibility for the crash 300. So let's also look at something else. Let's see the VIX. VIX gave us some beautiful buying opportunities today around 2 a.m. We got some beautiful buying opportunities according to what we had discussed yesterday, whereby we spoke about a range whereby once price breaks out of that range and retests that range, basically we take buys, or if ever it breaks to the upside, but if ever it breaks to the downside, we simply take sales. So that was the analysis for the VIX, and it actually played out. And unfortunately, it played out while many people were sleeping. The scenario happened while the majority of the people were not awake. So I hope everything is clear. Are we together?
So clear.
Okay.
Thank you.
Right, so this is the VIX. This is the VIX. This is the VIX. This. Right, so this is the VIX, volatility 75. So if you check now where we got the buys, it was simply based on what we had discussed already. We talked about this. whereby we said price has been ranging. Price was ranging here, ranging. This is a range whereby price will be forming the same lows and the same highs, ranging, faked out there, faked out here as well, faked out here again. So this fake out now, how do you know that this is a fake out? How do you know that this is a fake out? You simply know it by this move whereby price breaks out, then goes back inside. Simply a fake out. So what we wanted there for us to maybe enter sales was something like this, whereby after this break, we wanted the price to come back and retest and give us a rejection to the downside. Then we would have taken sales there. If ever we retested, then we got a rejection, we could have gotten the sales all the way to the downside. But that did not happen. Price simply shot back inside. So meaning if ever we didn't get a rejection, meaning we didn't enter any sales here. So how even this buy even started even here, one could have also gotten the buy even here. Then the break of this range, the break of the range and the retest. I actually saw it around 2 a.m. Break, the retest, then you would have entered based on 15 minutes or 30 minutes, you would have entered, then all the way. That was actually a 1:4 risk compared to reward. On a minimum lot size, you're actually risking something like $5 with a minimum lot size. For those with small accounts, on a minimum lot size, risking $5, you could have made 25. Risking $50, that's 250. So it now depends now with the account size that one has. That is what determines the risk that you take on the trades. So that was what we're looking at. Then we had this trend line here. So this trend line now, it actually also gave us selling opportunities if you check, because we are overall in a downtrend for the volatility 75. We are overall in a downtrend. So this trend line I took from the top, touch there, then I extended. So as soon as the market came there, it actually rejected, then went all the way. So that one also was also an opportunity to sell. That one. So that one was also an opportunity to sell. First target is always 0%. So here I'm expecting this sell to continue all the way to this 0% fib. Once the market comes to the 0% fib and breaks now this support and retests it. On the retest, we need the rejection. Once we get the rejection, we enter. We continue selling all the way to the downside, to the targets that we spoke about for the VIX. So that is also still another possible scenario. So someone maybe who might have missed the sell from the top there, you can even wait for the break of this support, or even if ever you want to enter earlier, you can even wait for the break of this one. Once market breaks this one, closes inside down here, you can even enter a sell. Then once we break this one and retest, they're giving us a rejection, we are simply also going to sell there and continue selling, because overall we are in a downtrend for the volatility 75 as we spoke in the previous videos. So we are overall in a downtrend. So that is also our view on volatility 75. Those are opportunities that you simply also need to take advantage of. Even if we don't call out the signal, you simply need to look at your chart, draw the areas, and once the moment is there, simply take the trade based on what we have been talking about all this while. So I hope the VIX is clear. I hope the volatility 75 is clear. Are we clear there?
可以。
Right. So just look at it. Don't you know what we are trying to do? We're trying to make you independent so that you don't need to wait for anyone to call out a signal for you to make money. You actually need to reach that level of independence whereby even if a signal is not called out, you can make money. Even if you wake up around 2 a.m. and no signal is being called out, you simply go to your chart and look at what we discussed, look at all the areas that we discussed, look at all those things. If the market comes to your area and gives you the confirmations that you want, you simply take the trade. No need to be afraid, no need to be scared. You simply take the trade based on the confirmations that would be there. So nothing to be afraid of. It's simply you being independent and not being able to wait for a signal every time to be called out. Because at the end of the day, right, so you see now what is happening on the crash 300, whereby price is actually breaking. Seems like it's actually breaking the key level. So even if it breaks there, we are not even scared. We are not even worried, because we know that at the top there, we have areas that we marked. We have areas that we marked whereby we say price, we expect it to go to. Even if it goes to those areas, we are still going to take the sales from that area at the top. So it coming to the top, to us, it's also an advantage, because we know that once we get the sales from the top and it continues selling for a very long time, to us, it's actually an advantage. It's actually a very, very big advantage. So here, that area, either this area here, either at this area here, price is going to come, touch, can go down, or can even touch and test these highest highs. So these opportunities you simply need to have. This is a simple structure that you can even draw on your chart. You can even draw this simple structure on your chart. You can even draw this simple structure. Once price comes there, you get a rejection, you enter. So now the targets, I think I showed you whereby with the trend line, we have a trend line, a major trend line at the bottom here. We have a trend line here. So that trend line as well you can also use it as your target for the sales that you would have taken there. That's a long time, because this is a 4-hour time frame. That can happen in a day or 2 or 3 days, depending on the momentum or the movement that it will be giving us to the downside. So it's actually a lot of money. If actually you know crash 300, you actually know that a move from there to here on a 4-hour time frame, it's a lot of money if you actually understand crash 300. So here on this area, so basically I'm saying this zone, that's where we're going to look out for the next selling opportunities. Right now we are relaxed because it is actually broken this key level that we're looking at. The key level is here. That's the key level that we were currently looking at for the crash 300, and it seems it's already breaking. So that's why, the reason why we always say you need to wait for a rejection, you need to wait for confirmations before entering. It's because of these things, whereby not every time is the market going to reject. So when you wait outside, not wait inside, you actually need to wait outside of the trade. You actually need to wait outside of the market, not waiting while it's having a trade. Because you know what most amateurs will do, once price gets to a key level like that, what they will do is they'll sell, then they wait for price to crash while they're inside. That is not trading. Basically, you are simply gambling with the market. You're simply, you're not trading. Professional trading is whereby you wait for the confluence, you wait for the confirmation, then you enter based on facts, not based on hope or based on feelings, but you're simply entering the trade based on facts that you're currently seeing and what you're currently seeing, not what you think or what you expect, because not every time what we expect is what will happen. So same as here, we expect once price breaks, for example, right now it has already broken this key level. We're expecting price to come there, then give us a rejection and crash all the way to the downside. That can happen, and that might also not happen, because I showed you that we also have a Fibonacci as well, and that can even block price from going all the way up there. This Fibonacci there, point A to point B, it can come and respect the 78.6 Fibonacci. And actually, so this is the 4-hour time frame. If ever you're looking at the 4-hour time frame, like this 4-hour candle, it is 1 hour 38 minutes to close. Can even in this 1 hour 38 minutes, can even come and touch there, then crash, and even close below this key level. So that can also happen. But if you go to a smaller time frame, you realize that the break has already happened. If you go to 15 minutes, you realize that it has already broken the key level. So now that is why looking at these higher time frames for taking your decisions from there, it's actually wise. Making your decisions based on the higher time frame. That is the best way of trading. So right now we are looking forward. If it doesn't come there, if it comes there, rejects, closes below our key level, we'll simply enter based on that. So the first target, as I have mentioned, is this area here. That's the first target, because most times it can even come and even continue with this uptrend. Continue with this uptrend, continue, go and break this high, make a high, continue. So anything is possible with the market, but we simply respond according to how the market moves. So this is the current structure for crash 300 that we're having. Make sure you mark those areas. Make sure you mark your key level. The first key level, mark it, because price can even go to 78.6, crash, and close below your key level, which will actually be an opportunity for you to enter. Or it can even push all the way to that highest high or that marked zone there. It also will be an opportunity to enter as well. So once we get there, you don't need also to rush to enter. Once we get there, we wait for the same thing. We wait for rejection. We wait for the confirmation on a smaller time frame. The bearish candlestick patterns, we need to see them. We need to see either the bearish engulfing pattern or the shooting star or the bear. I mean, any bearish candlestick pattern, we actually need to see it on our smaller time frame for us to enter those cells. So once it gets there, you don't sell just because it has gotten there. You sell after you get the what? The rejection. You sell after you get the rejection. So many people, they lose it because they sell, then they wait for the rejection. No, that is not trading. You don't sell, then wait for the, no, that is not trading. Because at the end of the day, you realize that every time you're always going to be hoping price to reject. So you actually wait, price rejects, gives you the confirmations, then you enter. So here, another crazy scenario. That's an awkward scenario that can even happen, whereby price can even come, break this whole area, break this area, give us a new high there, or a fake out, come back inside the area, then boom. That can also happen. We are also ready mentally. We are also ready for such scenarios whereby price can even come and break all the areas that you're expecting, break, go and give us a high there, the top there, come back inside the area then. So that can also happen. We're mentally ready for that as well. So right now we are ready for so many scenarios. Right now, the first scenario is for this current 4-hour candle or the 1-hour candle to close below our key level. Once it closes our key level, below our key level, and you get a bearish candlestick pattern on the smaller time frames, we're going to sell, our first target being this trend line. If it doesn't happen like that, we are simply waiting for price to push all the way to that yellow zone or the highest high, then we sell from there. Or if price even comes and breaks those areas and comes back inside the highest high, we are simply also going to sell based on that. So we are ready for so many different scenarios. I hope it's clear to everyone. I hope it's clear.
Yeah.
Yes. So these opportunities, some of them, they even come whilst you're sleeping. So
Question.
Yes.
Question. Why do we not take advantage of these other opportunities, like these buying opportunities that will be there? I feel like we're just leaving money.
Okay, that's a
but
beautiful
at the
question.
Same time, at the same time, it's also scary because we have something that we're expecting to happen and it can happen very fast whilst you are busy trying to buy